We're dealing with the technology adoption. It's the fastest pace of adoption of any technology that's investable. AI is not investable right now, and it's been growing at twice the speed of the internet. If we assume that it grows at the speed of the internet, which would be probably a false assumption, it should grow faster, for the rest of this year or so, we get to the end of 25 with 1.1 billion active wallets. Active wallets are not actual users because people have multiple wallets, much like people have multiple IP addresses, which is what this is showing too. We're comparing it to IP addresses. So we get to 1 billion wallets. That's a huge number, and that drives the adoption of the space based on Metcalfe's law and the valuation. Then if we extrapolate out into the future, I keep saying this space is going, this is the biggest macro opportunity we have ever been given. It's been the best macro performing asset of all time. It's the best risk-adjusted reward of any asset in all history. It's an alien asset class. And that trend of $2.5 trillion today to 10 to 15 trillion this cycle to 100 trillion by about 2030, 2032 is driven by this adoption curve. That's when you get to 4 billion active wallets by the end of 2030. That's a mega trend. That's all you need to know. 2.5 trillion, 10 to 15 trillion, 100 trillion. You're trying to capture that. You're trying not to fuck this up because this is the gift you've all been given, and everybody can put 10% of their wages in or whatever it may be because it's a democratized, fractionalized asset that's globally homogenous. Everybody in the world invests in the same product. Bitcoin is the same in Nigeria as it is in Brazil, as it is in the Cayman Islands. That is the gift to humanity. We get to invest in the infrastructure layer, the network layer of this incredible new technology. And on top, they'll build the applications layer, which will be the new Googles and Facebooks of this Web3 world.
It's the fastest pace of adoption of any investable asset in human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The growth rate is staggering and will result in the fastest accumulation of wealth we've ever seen. This conclusion comes from extensive research by macroeconomic expert and Real Vision founder, Raoul Pal. In his latest investor update, Raoul presented a 2-hour special breaking down every chart and piece of research, all pointing to the same conclusion: liquidity drives everything, and crypto will be the best performing asset of all. Raoul has been emphasizing to investors for months that all factors are aligning right now, leading us into what he calls the banana zone, a period characterized by parabolic increases in crypto prices. He believes that as we approach the US elections, increased liquidity in the economy will create a perfect environment for crypto prices to soar. This week alone, we witnessed the SEC reverse its stance and approve an Ethereum ETF, and Donald Trump publicly endorse Bitcoin and the future of crypto in the US.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So that's what's driving this trend. The debasement of currency plus the ridiculous adoption of this technology, which is only growing. You hear every institution now saying, well, we want to build real-world assets on Bitcoin rails. The exchanges are going to build on it. The corporations are going to build on it. You know, we're already seeing so many people building on top of these rails because it's just a better system. Then we've got digital ID layer. We've got the stable coins layer. We've got so many things being built. That's going to keep driving this logarithmic chart, which gets us to, at the end of this cycle, we don't know, but, Bitcoin, according to our work, could get to 400,000, could even go higher than that. Sure, it could be truncated too, but it doesn't matter because the trend goes longer. And your game is to stay in the trend. Even if you take some lifestyle chips off, let's say at the end of this year, just so you take economic pressure off yourself, it allows you to continue to participate in this trend. Because if you don't, you try and get cute and try and time it, you'll fuck this thing up. My job here is trying to unfuck your future. So you can understand where I get these little mimetics from. How to unfuck your future. You're being debased upon. Here is your answer. Don't fuck this up is don't miss out on this trend. The crypto supermassive black hole, as I'm about to explain to you, means that really there's only one asset that matters. And then we'll come on to the final one, which is the banana zone that you all love. So again, we go back to the total liquidity chart. This is how you are being fucked. This is what you need to unfuck yourself from is the debasement of currency. Crypto's giving you that. It's also that tech adoption. and it's your route out. So at Xpan, we built out this table that I put on Twitter. I put it on every month. But look, it's a noisy table. But what it's showing, if you go to the bottom of this, the light blues are each year from 2011, crypto is the best performing asset 3 years out of 4. In the 4th year, it's the worst. So macro winter, it's a terrible asset. Well, terrible asset, the lows are always higher than the previous lows. It's in a secular trend. You don't even need to worry about it. If you just own it, you just own it. But the other years, it outperforms everything else, bar none. But then when you put that together, even with the numerous 85% pullbacks, Bitcoin's done 20 million % returns. ETH, which started later in 2016, well, that's done 324,000% returns, and Solana has done 8,300% returns since 2021. When you look at the annualized performance, Bitcoin is 139% a year, ETH 146, Solana 203. Then we go down to the next best performing asset, technology. This is the NASDAQ, not the exponential age basket that we built in Pro Macro, GMI, and the exponentialist, different variations of it. This is just the NASDAQ. It's done 17% returns. So the NASDAQ has managed to outperform the Fed balance sheet, the global liquidity plus inflation by a few percent, actually by 5% a year. That's okay. Nothing else, no other asset has outperformed the debasement of currency plus inflation. Not one. The S&P roughly keeps you flat. Everything else, your future self is poorer from owning it. This is profound in your understanding of asset allocation. Once you realize this, you realize you're wasting your time trading other stuff. You really are, because you are not going to compound the returns that you need for your future vision of yourself to be wealthier. So let's take NASDAQ, which is the best performing equity market in the world, bar none, over the last decade. And we look at it versus Bitcoin. It's down 99.92%. Get your fucking heads around that. That's the difference between the next best asset beyond NASDAQ. It's alien. This is the biggest macro trend of all time. And it's so powerful that anytime you take money out of crypto and put it into anything else, you're going to lose money. So therefore, the only thing you can take crypto money out of is lifestyle, because lifestyle is priceless. Everything else is priced on a relative basis. And what you find is everything goes down. It's why a lot of people in crypto hold out to buy property until they're ready to, because property gets cheaper if your denominating currency is Bitcoin or another crypto. The supermassive black hole means that this beautiful technical chart of global liquidity means we're about to start the next leg of liquidity, which we talked about before. The next leg of liquidity is the driver that will continue the next leg of this market. And the central banks are showing that liquidity is coming, because them cutting rates says, hey, we're ready for liquidity to come. Remember, the reverse happens in crypto winter and macro winter. They start hiking rates and they start withdrawing liquidity. Here, they're increasing liquidity and cutting rates because they want stimulus. That is your friend, your biggest friend. And when those factors come together, technological adoption, people investing in the space, liquidity starts flowing, you get the banana zone. And the banana zone is just all of these factors coming together for macro summer and macro winter. That's what lies ahead as far as we can see. And this is where it gets bananas, which is a word you'll hear us use a few times. It's so arrogant and stupid to think that you can just simply break it down from here's a 4-year cycle and it breaks down to simple 4 years, but it does. And it has done since 2008. And what you've got here in this kind of overly colorful thing is, you've heard me talk about this, macro spring in green. That's when the economy starts thawing because liquidity is starting to rise. Then summer comes and liquidity starts really moving. And then fall is when you really often get a large injection of liquidity before eventually we go into winter, which is the blue, and liquidity shrinks as the central banks pull liquidity out of the market to try and cool inflation and the economy overall. And they've been doing it perfectly. These debt cycles also happen to be the US presidential election cycle, because it so happened that 2008 was the presidential election cycle year. It's also the same as the Bitcoin halving cycle, because Bitcoin was 2008. So we've got one mega cycle that rules it all. It's the most powerful cycle we've ever had. And most people can't see it or don't yet understand it. And it makes them be wrong in their understanding of how everything works. And you can see it, people trying to explain things on Twitter without understanding what really moves things. But when you understand that same grid of colors, the same seasonality, understanding that each of these was an increase or decrease in liquidity, well, when you look at the NASDAQ, and we've proven how NASDAQ is correlated, NASDAQ breaks down exactly by the seasons too. NASDAQ does well in summer, which is we're in now, or just transitioning into, but it does really well at the end of the cycle in fall. It tends to have a momentum. It's kind of a reflexive process, which really builds on itself, because in fall, earnings are at peak. So equities are driven by earnings plus the investment cycle. People have got more money to invest. So fall, so that would be equate to 2025, should be really strong for tech and strong for this year too, which is summer, coming off green, which tends to be very good with spring too. So this is this exponential age tech trend that I talk about. But crypto, same cycle. This is the crypto cycle. We can call it crypto spring, crypto summer, crypto fall, crypto winter. It's the same as the election cycle. It's the same as all the thing. The presidential cycle. They're all the same. So crypto tends to do decently well in spring. The anomaly was 2020 because of the pandemic. It did very well in spring, less well in fall. Generally speaking, like the NASDAQ, fall is when the real price action starts. My guess is we'll probably be more similar to 2017, 2013, this cycle, because we're not jamming excess liquidity in early, it'll accumulate over time. But anyway, now you understand the cyclicality, why it happens, based on liquidity. You understand liquidity itself and why liquidity is there. What its job is to do is debase the currency to pay for the debt. That's making the rich get poorer, the poor get poorer. It means your wages don't go up as much as the cost of housing. It's all described within the Everything Code.
Raoul Pal's extensive research into the Everything Code concludes that crypto is experiencing an unprecedented pace of adoption with the potential to generate unparalleled wealth. Predictions suggest 1.1 billion active crypto wallets by the end of 2025, indicating a monumental shift in the financial landscape. Pal meticulously details how liquidity drives everything and why crypto is poised to be the best performing asset. As the US elections approach, the influx of liquidity combined with the recent approval of Bitcoin and Ethereum ETFs sets the stage for a parabolic rise in crypto prices. His analysis suggests Bitcoin could reach $1 million per coin by 2030, while Ethereum could hit $20,000 per ETH by late 2025. These projections, supported by bipartisan support in the US and easing liquidity conditions, highlight the perfect storm brewing for crypto. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.